Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Jess de Los Santos. Here are today's top stories. In pitching the Philippines to American investors, President Bongbong Marcos says he cannot imagine the country's future without the United States as an ally. The president graces the New York Stock Exchange and rings the bourse's closing bell.
Now back on the home front, senators throw their weight behind plans to ban POGO operations.
The share of the private sector's debt in the GDP eases in the second quarter on the back of further economic rebound.
And heads up motorists, oil firms are implementing a new round of price adjustments. That's today, with diesel prices down by more than 4 pesos a liter. We begin our broadcast with President Bongbong Marcos touting long-standing Philippine-American relations as he woos investors over in New York. Now, during his visit at the New York Stock Exchange, the president told business leaders that he cannot see the Philippines in the future without the United States as a partner. The president says he expects economic ties between the two countries to further strengthen through government-to-government deals, joint ventures, and public-private partnerships.
It is very clear to me in my vision for the way that the country will move forward that I cannot see the Philippines in the future without having the United States as a partner. We have adjusted many of our ways of doing business at the behest of our friends in the United States and of the American businesses that are already in the Philippines. And so I think that will give us great opportunities in the future and for both our countries, for private corporations, for government-to-government agreements and arrangements.
Now, the president also presented the country's overall economic situation and says reforms have made it easier for businesses to set up shop over here in the Philippines. Now, after attending the New York Stock Exchange Economic Forum, President rang the trading hub's closing bell on Monday afternoon, September 19th, U.S. time. He was joined by First Lady Liza Araneta Marcos, his son Ilocos Norte Representative Sandro Marcos, as well as Speaker Martin Romualdez, Trade Secretary Alfredo Pascual, and Finance Secretary Ben Diokno.
In other news, the push to ban Philippine offshore gaming operators or POGOs in the country is gaining support at the Senate, with lawmakers filing a bill that seeks to prohibit online gambling. Senate President Mig Zubiri notes that there is a need to weigh the social costs of POGOs against what he called a meager income of 3 billion pesos that the government gets from the industry annually. Over the weekend, Senator Amy Marcos disclosed that President Marcos is thinking of outlawing POGOs following the string of gruesome crimes and corruption linked to their operations. Just last week, NBI authorities rescued in separate operations some 89 foreign nationals in Pampanga and 41 in Pasig who are allegedly abducted and forced to work by POGO service providers. Most of them are Chinese nationals, while one is a Myanmar national. The Bureau of Immigration says the foreign nationals have now been blacklisted and will be deported to their home countries. On One News's The Big Story, Senate Minority Leader Coco Pimentel says banning all forms of offshore gaming will also make law enforcement less complicated.
So, because of this confusion that there is a legal POGO in our country na nagkakaroon po ng anong tawag mo doon, shield or cover. Nagkakaroon ng cover that some are here illegally, some are here legally. Tanggalin na natin yan, burahin na natin yan. Let's simplify everything.
The peak of POGO activities in the country back in 2017 to 2019 resulted in a boom in the property market. That has since slowed down during the pandemic, but do we expect things to go further downhill now that authorities are looking to ban POGO operations in the Philippines? Let's get insights from Dom Andaya, Senior Director for Tenant Representation of Colliers Philippines. Dom, good day. Thank you for joining us. let's be direct here. How big of an impact is this going to have on the property market should there be an outright ban of POGOs here in the Philippines?
Okay. Good morning, Jester and Danie. Thank you for having me. So we're talking about POGOs. Prior to the POGOs, you mentioned the years 2017 to 2019. Prior to that year, the office market was only about 400 to 600,000 square meters per annum. Now that when the POGOs entered the market, we reached the peak in 2018 at 1 million square meters. So that's how big of an impact POGO had in terms of the office market, and that translated to the other property sectors like, of course, the residential and the retail and the others.
Okay, sir, how significant is the contribution here, apart from, of course, tenancies? Having these people here occupy residential spaces, retail spaces, taking that out, what will be is there going to be a snowball effect, or do you agree with some of the government officials saying that the social costs are higher than the possible benefits of keeping these here?
Okay, so I also have to make a distinction here, because before the advent of the Chinese POGOs, a lot of gambling companies are already in the country, licensed under the Cagayan Economic Zone Authority. And these are legitimate gambling software development. Some are doing backroom operations in the country. Some are doing live online operations. And when the government instituted everything under POGO, under PAGCOR, all of these previous operations were classified now under POGOs. Now, we need to ask ourselves, what specific segment of the POGO industry is causing us these social costs that are being discussed in the news? So, well, it's significant, right, if you talk about the Asian market. But then, do we just outrightly ban everything? Probably that's when I will not agree.
Okay.
But talking about that, like what percentage of at least offshore gaming operations would you deem should at least be maintained? I mean, what percent share of those are Chinese operations or coming from mainland China at least?
So at the height of the POGO, we reached 1.4 million square meters of space occupied by the POGOs. And this is combined with the other markets already, Asian, Europe, and the US. No, but a lot of this, of course, I would say 70-80% would be the POGOs catering to the Asian markets. Then probably, I don't have the specific numbers. I'm just coming up with guesstimates here. Then probably about 20% should be retained.
But given that as well, how lucrative still are POGOs? I mean, earlier we did report some lawmakers saying that revenue is only at 3 billion pesos. I mean, just how vibrant still is a POGO industry here in the Philippines, especially when we're talking about its impact in the property market over the past 2-3 years.
Okay, I mean, the reduction in the taxes collected by the government could be attributed also to the decline in the operations of the POGO. So at the height, I mentioned 1.4 million square meters. Now, that space occupied was reduced to just 50%. So POGOs are only occupying 700,000 square meters at the moment. If you look at the ratio and proportion, 2 billion pesos of taxes collected at the height, now we're down to 3.9 billion. So, but then the problem is not within our country. The problem is the home markets of these operators, which does not allow them or do not allow them to come back here and operate.
Okay. Dom, shifting from POGOs to BPOs, the FIRB has allowed basically up to 100% work from home. How is this going to impact the tenancy? Because, you were saying previously that if POGOs leave, that space will be absorbed by the growth in BPO sectors. Now that they are allowed to keep their incentives and work from home, how is that going to change?
Okay, so you asked me about the significance of the POGOs in terms of the office market. The remaining 700,000 square meters currently occupied equate to about 5% of the total office stock. So if the government decides to ban POGOs outrightly, then additional 5% of of vacancy will be added to the market. And our current occupancy or vacancy is already at 18%.
Wow,
so
okay.
I don't think we cannot afford to do that. If we are to do that, it has to be gradual. Now, shifting to the BPOs, yes, there was that development that, that finally FIRB agreed to, accommodate the work from home or work from anywhere request of the BPOs by opening up the transfers of enterprises from PESA to the Board of Investment. And the latter doesn't have that locational requirement. So that will definitely have an impact in terms of the occupancy. So the more that we will have issues with not just the office market, but the property sector in general. Although I have to mention also that starting August of 2021, we've seen the rebound of the office market starting. But with the amount of space available in the market totaling to about 2.4 million square meters in the second half as of the second quarter of this year, that amount of space, the absorption period could last until 4 or 5 years.
Okay, it's quite worrying.
And does this mean also that we should be expecting further correction in rental rates, especially in the office space market? We're looking at two factors here. POGOs, at the same time, the possibility of vacancy due to BPOs, at least making that transfer to the BOI.
Definitely. Without this news about the POGO ban, we were still forecasting further decline in rents in this year. So that will be exacerbated by a POGO ban. But then some markets or some sub-markets are performing better than the others. So I think now is the time that we would see adjustments or improvements based on location and based on developers.
Okay.
But can you give us numbers though? Like how much of a vacancy or how much of a correction in the rental rates were you looking at prior to this news about POGOs?
Okay, for this year, additional 7% on the average, because what we noted in our two previous reports is that occupancy has already stabilized, meaning the occupancy level is already increasing.
Okay.
But then vacancy will continue to increase simply because of the additional supply that will be completed this year and next year. So it's already supply driven. But demand has stabilized already. So the rental decline that we have projected for this year is already a tempered decrease as compared to the previous years.
And sir, the traditional office space tenants, apart from POGOs and BPOs, do you see what is your outlook on this in terms of them absorbing this, gap that you say will exist for 4 to 5 years? Which growth areas or sectors are you looking at to fill that need?
Yes, we're very positive about the growth of the BPO sector because one of the best ways still to manage costs elsewhere is still outsourcing. So we are seeing that primarily from the BPOs. In fact, last July, we've seen huge expansions, not just relocations, not just consolidations, but huge expansions coming from, say, Facebook, taking up 15,000 square meters in BGC.
Okay.
Wells Fargo taking additional 20,000 square meters. JP Morgan, additional on top of their new building. With a size of 70,000, they also committed to additional, I think, at least 15,000. And there are a lot more others who are taking on additional space. But then these remain to be tempered expansions because this already takes into consideration the work from home component.
Okay, very interesting there. So growth in that industry should temper or at least offset the work from home flexibility arrangements as well. So very interesting points you've raised there. Dom Andaya, Senior Director for Tenant Representation over at Colliers. Thank you, sir.
Thank you.
Now let's pause for a quick break, but coming right up after that. The MVP Group urges the government to fast-track its decision whether the 94 billion peso Metro Cebu Expressway would be offered to the private sector.
More of that and other stories when Businessworld Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danie, Laurel. Now, motorists, you may want to fill up your tanks as oil companies are rolling back prices on diesel and kerosene.
Gasoline prices, however, will see no movement this week. Effective today, September 20, diesel prices at pump stations will be slashed by 4 pesos and 15 centavos. Kerosene prices will also roll back by 4 pesos and 45 centavos per liter this week. Meanwhile, gasoline prices remain unchanged.
The Oil Industry Management Bureau of the Energy Department attributes the decrease in prices to interest rate hikes implemented by the US and Europe. Global demand on petroleum products has also been low as of late, with the exception of gasoline, which is widely used in the US due to increased mobility amid the onset of summer.
The country's balance of payments position remained in a deficit for a 5th straight month in August. BSP data showed that the country's BOP deficit stood at $572 million last month, a turnaround from the $1 billion surplus recorded in the same month last year. Still, this was the lowest deficit posted in 4 months or since the $415 million seen in April. The Bangko Sentral attributes the deficit to outflows from the payment of foreign debts. The BSP expects the country's BOP position to end the year at an $8.4 billion deficit, equivalent to negative 2% of GDP amid weaker global demand.
The IT BPM industry considers a welcome development the move allowing business process outsourcing firms to transfer their registration from PEZA to the Board of Investments. Speaking with us here on Business World Live, IT and Business Process Association of the Philippines President Jack Madrid said the FIRB resolution is very important for the industry as it provides full flexibility for their work arrangements. He expects that a good number of the over 400 IT BPM firms that sought extension of the hybrid setup over the past months will seek transfer to the BOI. Madrid admits, however, that some firms may choose to stay with PEZA because, unlike the BOI, it provides a one-stop shop for registration.
The main attraction of PEZA is and has always been the one-stop shop suite of services that they are able to provide their locators. This is a big deal, in my opinion, because it reduces a lot of the administrative tasks and allows investors to do what they set out to do. And I think this will remain a very prominent feature of remaining with PEZA.
The Institute of International Finance reports that the share of the private sector's outstanding debt in the country's gross domestic product, or GDP, eased in the second quarter. IIF's Global Debt Monitor showed the debt-to-GDP ratio of Philippine households is down to 14.8% from 16.4% year-on-year. That of non-financial sectors, meanwhile, decreased to 31.3% from last year's 32.4%, while that of the financial sector slid to 10.5%. UANP senior economist Sid Tarosa attributes this decline to a rebound in business activity in the country and improved economic conditions. Despite this, the government's overall debt-to-GDP ratio rose to 58.3% in the second quarter. That's from 55.2% last year.
And this from the Philippine Star, the MVP Group eyes a 94 billion peso private-public partnership for the Metro Cebu Expressway, or MCE. The operator of the Cebu-Cordova Link Expressway, or CCLEX, says the company wants to build and operate the MCE. CCLEX Corporation, led by Manny Pangilinan, says it will offer a bid for a private-public partnership deal should the government open the project to the private sector. The 73-kilometer connector road aims to link Naga City in the south of Cebu to Danao City in the north.
And those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos.
And I'm Danie Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us.
And you're still watching Businessworld Live. Now, Dan, we saw a painful slump yesterday, especially now that we're closing in on rate decisions here. How are markets doing? Still jittery?
A little bit, Jess, but a slight improvement from yesterday. But nevertheless, take a look at that. Still at 6,400. So we haven't gone back to the 6,500 levels here. We're up, nevertheless, by 0.6% after you mentioned quite jittery already. And even on the back of Wall Street performing pretty bad as well. Yesterday, we did have Wall Street hitting a 2-month low the day prior. Now, take a look at our best performers here. We have BDO and URC leading the four, up by 1 7/10% for our biggest bank. But on the downside, you've got Globe, Emperador, and Metro Bank sitting out this slight recovery. Now, Jess, I did want to take a quick peek at one specific stock, and that is Pilipinas Shell. Now, you go to get your gas, you go to these gasoline
For that
stations
road
just for
trip.
gas. But what about going to gasoline stations to eat in Starbucks or shop in Adidas? Well, that's actually what they're trying to achieve here. They're going to be diversifying it. Recall that they closed the refinery, so now they can focus on the retail part of the business. They want to drive the non-fuel earnings to grow at least 15% per year. So they want all of their at least 500 of 1,400 stations to have retail offerings. So you're going to be seeing Jollibee, McDonald's, Starbucks, and Adidas. They've also said they will be adding electric vehicle charging stations in some of their stations, Jess.
Mukhang mas malaki-laking gastos if you're going to go on a road trip. Okay, but earlier we were talking to Colliers and we were asking questions, of course, about the property sector, particularly on this one. You have the work from home arrangements being extended, of course, to BPOs. How's that at least affecting movements here among our property players?
Well, I have to say that the reaction to that was yesterday, okay? So we did see the office developers fall. You have Mega World, the Double Dragon REIT dropping, for example, 4.3%, the lowest on record. Of course, they have, they're the landlords of the biggest, the BPOs. You've got Ayala Land as well, Ayala Land and SM, that's 60 to 85% of their office tenant mix are BPOs. And you can see a bit of a recovery here after quite a slump actually yesterday, Jess. The property index up by 0.6% with SM Prime and Ayala Land leading the recovery.
All right, and that's it for today, September 20, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.